Well, hello. Merry Christmas. I'm Jim Dunlop, and I'm one of the managing partners at Advent Partners. We wanted to share one last market update for 2022 and share a few thoughts as we look forward to 2023. This has been a very unusual year for investors, and I want to share a few thoughts and ideas of why we think this has been a really challenging and tough year, quite frankly. So we'll start with stocks. Now, what we're looking at here is the S&P 500 over the last 42 years. And S&P 500 is the 500 largest stocks in the United States. The red dots tell you in any given year the lowest point for stocks. So every single year you can see stocks were negative at some point during the year. The gray bar is where the market finished. So 32 out of those 42 years, stocks were positive. And this year is definitely a bear market. We're down 19% since the beginning of the year. And of course, we were down 25% at the worst point of the year. And so this isn't an unusual bear market if we look at a little bit of history. But here's why I think this bear market has been a little unusual, and it has to do with the bonds. If we look here at a similar chart for the Bloomberg US Aggregate Bond Index, we can see that historically bonds had positive returns in many years, in fact, 42 out of 46. And prior to this year, the worst year that we saw was bonds were down 3%. Now, bonds, again, looking at the red dots, were down at some point during the year. But again, if we look at this year, it's the worst year for bonds in recent history. And there are many speculating that it could be over 200 years since we've seen a bond market this bad. So in the past, we were fortunate because bonds act as a shock absorber in the last few recessions for our portfolios. And this year, whether we were aggressive investors or conservative investors, we really felt the pain across the board as all categories of investments were down. Now, as we think about 2023, what does all this mean? We don't know. Certainly the risk of recession is there. And I think the thing to pay attention to is going to be unemployment. Our economy is very much consumer driven, and so being consumer driven, it means that if people have jobs, that they've got money and they're spending it, and that's been the story this year. Yes, we're all being pinched by inflation, and that has slowed things down, but we haven't seen the economy contract because people still are spending money. Now, if people start to lose jobs, the unemployment rate starts to go up in 2023, I think the risk of recession becomes very high. So we won't know until we get into the year and see what's unfolding. And I think it's always good as you sit down with your advisor to refresh what your goals are and how the markets are impacting that. Again, investing is a long-term proposition, and most years looks pretty okay. But every now and then we get some rough years, and this has been no exception. We don't know where next year will go. There's a number of different scenarios, both positive and negative, that we could easily foresee, and time will tell. We look forward to being in touch in the new year and reviewing what these things mean for you and your portfolio. In the meantime, have a blessed Christmas with friends and family. And if there's anything that you need from us, please don't hesitate to reach out. So we thank you very much for the trust and business that you've placed in Advent Partners, and have a Merry Christmas.